Okay, good afternoon and welcome again to the final Regent Business School Accounting Revision Program. I just want to tell you, we stopped in companies last week. We were doing paper one. I wanted to very quickly go through the last question in paper one and then we'll proceed quickly to paper two. I need you to understand that interpretation of financial indicators, that's your financial information, the ratio question, which are referred to ratios. You know that section is so important, it is extremely important, and you know what? I'm going to show you that how easy it is for you to pick up marks. It is absolutely simple, easy, straightforward that you can pick up those marks. And in fact, I would even sometimes suggest that maybe you should just go and answer that question straight away. Because what happens, many learners tend to shy away from this question. They leave it blank and they lose quite a substantial, like in this paper here, 35 marks. You carry 35 marks, and believe me, that it is so easy. All the information is provided on the question paper. You just simply need to take the information from the question paper and apply it to the questions that they've asked. Okay, let's very quickly look at this. The first question is they wanted you to fill in those blanks or the matching. They said choose the correct words from those given in brackets. Let's start straight away. In the event of a business becoming bankrupt. So if a company becomes bankrupt, shareholders would only lose their investment in shares. That means whatever shares that the shareholders had purchased, that means the money that they invested in that company, they would tend to lose that. That is because of the limited liability concept. So the first thing is limited liability. You must remember that the personal assets may not be attached. So in other words, if the company goes insolvent, the shareholder loses what shares he was owning in those companies. That's all, he will lose that. Okay? The second one is they want to know whether it's historical cost, materiality, or business entity. GAAP principle stipulates that significant items such as interest expense be disclosed separately on financial statements. Besides interest expense, things like director's fee, auditor's fee, they must be disclosed separately. You can't mix it or combine it with salaries and any other sundry expenses and so on. Now that is because of the materiality concept. So we look at the materiality concept, anything significant, anything important, it must be disclosed separately. The third one, because the net asset value per share or the market price is influenced by the demand for shares on the stock exchange. So over here, the demand, that is the price of the share, is influenced by the demand for the shares on the stock exchange. So which one would it be? The net asset value per share or the market price? The market price obviously will influence the demand for the shares, but then you also have like the net asset value. What is net asset value? Net asset value tells you what a share is worth in a company, right? They work out the net asset value, you must know the formula. But our answer for this one here will be the market price is influenced by the demand for shares on the stock exchange. Net asset value is in our books. Market price, JSE. So the answer for the third one is your market price. Okay, now let's look at this. This is a favorite question. It comes up all the time. I'm going to go through it with you very quickly, but make your points, make your notes so that you know exactly what to look for. The first question, okay, they said they've given us Green Limited, BCM Limited, and Plaza Limited. They've given us three companies. The information relates to 3 different companies operating in the same industry, whether it's in gold or steel or retail or pharmaceutical. They're all in the same industry. The financial year of each company ends on the last day of February, which we are saying 28th of February. Okay, so the end of the year is 28th of February. Now, required. Provide figures, financial indicators, or calculations in each case to support your comments and explanations. Now, listen very carefully to what I'm saying. If you don't put figures, then they will not give you the marks. You must indicate figures. First thing, you will identify the ratio that you're commenting on. The first thing is the financial indicator. You will identify the indicator, and then, yes, this is the same paper last week. I'm just finishing the last bit, and then today we will look at the paper today. Just now, I want you to do the ratios first. Just let's quickly finish the ratio question. Okay, so the first question, they asked you to provide figures, etc. Now, liquidity. Identify the company that has the most efficient liquidity position. Quote and explain 3 financial indicators to support your choice. Now, when they ask you about liquidity, then what we're going to do is we're going to look at the 3 ratios that you would normally look at. Is your current ratio, the asset test ratio. You look at current. If you look at the current ratio, the asset test ratio. Now the third one, they gave us average debtors collection. So I will choose that one. If they give you a rate of stock turnover, then I would have chosen the rate of stock turnover. But in this case, the 3 that you would comment on, current, asset test, and the average debtors collection period. Now they wanted you to identify the company that has the most efficient liquidity position. So to quote that, if I look at green, it was 3,3:1. BCF 1,8:1. Plaza 1,6:1. They want you to identify the company that has the most efficient liquidity position. Okay, so BCF and Plaza look ideal at this point. Not green. Green has too much of current assets compared to the liability. 3.3:1, it means for every 1 rand loan, you have 3 rands 30 available. You have too much of idle cash, or you may have too much of stock. Let's look at the second ratio. Asset test. There again, BCM looks the best because 1,1:1. It means for every 1 rand I'm owing, I have 1 rand 10 cents. I will be able to settle my short-term debt without touching my stock. Plaza has a serious problem. Plaza has a liquidity problem, meaning for every 1 rand you're owing, you only have 40 cents. You only have 40 cents. Not good enough. Plaza will have a liquidity problem. And then the debtors collection period, 39 days for green, 27 BCM, and 31 days. So BCM, again, the debtors are paying us within 30 days. They're giving us our money in 27 days. And they told you the credit terms at the bottom. Debtors are granted 30 days to settle their accounts. Creditors are allowing us 60 days. So our debtors are paying us in 27 days. Debtors are paying us in 27 days. Now, if debtors pay you in 27, your money is coming in quickly. So your answer here, firstly, you're going to comment on the current ratio, the asset test, and the average debtors collection. And the company that you will choose, it's a clear-cut answer, BCM Limited. So your company that has the most efficient liquidity position is BCM Limited. You can see the current ratio is ideal, the asset test is perfect, average debtors collection, very good. Okay, so you need to identify the company, you identify the ratio, and you give the figures. You must give the figures. You take it, imagine you take it from the question paper and you're putting it on the answer sheet. And you're scoring 6 marks for it. You just simply needed to know what you're looking for. Don't go into the exam room under the misconception that, you know what, they give us a ratio sheet. There's no reason for me to learn my ratios. You all know for a fact that they give you all the ratio sheet with no headings. So if you don't know your ratio, you won't know which ratio to use. So remember liquidity, how liquid you are. Can you pay off your short-term debt easily? Current ratio, asset test, debtors collection, stock turnover rate they gave you. Okay, let's look at the next question for 6 marks also. A director of Green Limited feels that the company should pay back the loan as soon as possible. Explain what you would say to him. Quote 2 financial indicators with figures to motivate your opinion. Look, they will, you know what, most of these questions will be repeated in the final exam paper. You should practice them so that you know exactly what to talk about. The moment they talk about the loan, it can go either way. They can tell you, here, they're talking about paying back the loan. Another question can ask you, they want to take an additional loan. But your answers will use the same 2 ratios. The moment you see loan, 2 ratios come to mind. Debt equity ratio and return on total capital employed, ROTCE, return on total capital employed. So now they tell you a director of Green Limited, so we're looking at Green specifically, they're telling you that you should pay back the loan as soon as possible. Explain what you would say to him, and I want you to quote the ratios, financial indicators. So let's look at Green Limited. Go look at debt equity, 0.6:1. Now 0.6:1, it means for every 1 rand invested by the shareholders, the company is borrowing from the bank 60 cents. For every 1 rand that the shareholders have invested, we borrowed 60 cents. This business, low risk. Yes, if it's 0.9 approaching 1:1 and above 1:1, 1.2:1, that's high risk. This one here is low risk. It's low risk, and so basically what I'm saying that the debt equity ratio for Green Limited is fine. It is 0.6:1. It's slowly cleared. It's not risky. Now let's look at the return on total capital employed, ROTCE. Now just make sure you get the right ratio. You not get something else. They've got your return on average capital employed, 14.7%. Now, how do you know whether the return on total capital, just to answer your question over there, no, not if it's more than 50. Yes, if it was around 80, 90%, over 100%, then it is high risk. This is still good enough. Financial institution, if you are 0.6:1 is good enough. In fact, 0.72, now you're approaching the danger zone. But 0.6, you are still fine with it. Remember now, return on total capital employed. How do you know whether that's good or bad? 14.7, it doesn't tell you anything. But what you do is you compare return on your average capital employed with the interest rate. What is the interest rate on the loan? So the bank is charging you, it's the last one there, 13%. You can see 13% the interest rate on the loan. So bank is charging you 13%. I'm using the bank's money in my business and I'm generating 14.7%. So I am positively geared. As long as you are earning above the interest rate, if you are earning a return which is greater than the interest rate, then you would be positively geared. So just make sure, yes, positive gearing. So in this case, now the question, let's answer it. The director of Green Limited feels that the company should pay back the loan as soon as possible. Explain what you would say to him. So you're going to say that the debt equity ratio was 0.6:1. The business, there is low risk. It's still, what shall I say, positive gearing. I will look at my return on total capital employed is 14.7% as compared to the interest rate, and therefore there is no need to pay off the loan immediately. Very good. I see the answers that are coming up. Very good. Positively geared, no need to pay off the loan. You can continue to service the loan. I hope you understand when I say service the loan means pay your monthly installments that you're supposed to pay. Don't take a large lump sum and go pay off the whole loan. Just continue paying the bank whatever arrangements you have. So in this example, no need to pay off the loan. Okay? Let's look at the third question. Comment on the dividend payout rate of Green Limited and Plaza Limited, and provide a reason for the directors of each company deciding on these payout rates, quote figures. Right. Now, this question about the dividend payout policy. Look, all three questions over here on this paper, I'll tell you something. They got a 95% chance of coming out in the final exam. 95%. That's how confident I am that these things, they must ask you the same thing. The dividend payout policy, dividend payout rate, it's in the paper. I haven't seen the paper. I don't know what's in the paper, but I'm telling you through my experience, that question has been, appearing all the time. Everybody, dividend payout policy, dividend payout policy. So I'm telling you, you know what? You're sitting here, you're looking at it, listen to what I'm telling you, practice it, look at it, write things out. You must never ever say you know the answer and you don't need to write it. What you must do, take your pen, take the page, write it. And then when you start writing, suddenly you realize, hey, I don't know what to write. Look at the answers that you have in front of you with the possible memos and so on, and learn to write. Don't try just, saying, yeah, I know the answer. Okay, now what is the dividend payout policy of? Comment on the dividend payout rate of Green Limited and Plaza. Now let's look at what was the DPS, dividends per share. It was 47 cents in Green Limited. What was the EPS? It was 91 cents. Now, it still doesn't tell you anything until you convert that to a percentage. So what you need to do is take 47 cents and put it over 91 cents times 100 over 1. 47 over 91 times 100 over 1, and it will give you a percentage. That should be just slightly less than 50%. It should be, let's see, they're paying 47, or they're paying just over 50%. So you're paying out 51.6%. You're paying out 51.6%. So 47 over 91 times 100 over 1. You're paying about 51.6% of the share earnings to the shareholders. Okay? Right. Now that means this company, if they take out 51 or 52%, they're keeping back, they're retaining 48%. Keep that in mind. Let's look at Plaza Limited. Now, Plaza paid out dividends of 66 cents. They paid out 66 cents, but the company only earned 64 cents. So in this case here, we're working out the rate. That means we're working out the ratio, the percentage. So basically, yeah, I see that it's the rate. The dividend payout rate is your percentage. You need to convert it to a rate. So dividend payout policy is exactly what policy that you are applying as to how much you are paying out, etc. And the rate is the percentage. Okay, perfect. What some of you are putting up the answers. Now, that means Plaza is paying out 103%. So Plaza is paying out 103%. Green is paying out 51.6%. Now, you need to talk about the policy. See, that was the rate. What we just calculated was the rate. Green Limited is retaining 48% of the earnings for future expansion and growth. They can grow the company. Whilst Plaza is simply, as somebody has put it up here, they're just simply making their shareholders happy. They're trying to satisfy shareholders. They are using profits, that is the retained income of past years, to pay out dividends this year. They're using the profit, that is the retained income of the previous years, to give the shareholders dividends this year. And therefore, if I have to comment on the dividend payout rate of Green Limited and Plaza, provide a reason for the directors. So Plaza's directors, they're trying to keep the shareholders happy. They're trying to keep the price of the share on the JSE at a higher rate, basically. They're trying to improve the price of the share on the JSE, because yes, they are declining in profitability in terms of, if you think about it, their retail income will decrease. Plaza's retail income will decrease, but that of Green Limited is improving. Okay, so basically we've quoted the figures, we've quoted the policy. The policy now is basically Green Limited, future growth. Plaza, keeping shareholders happy. Okay, they're trying to maintain the price of the share on the JSE. You must remember, shareholders or investors only look at what dividends they get. If the shareholders are happy with the dividends, they'll want to buy shares in the company. They're not interested in anything else. So that's what Plaza is trying to do, trying to create a demand for their shares. Okay, let's look at the next question over there, 4.2.4. That's the shareholding of Sandy Charlie. Sandy Charlie is a shareholder in 2 of 3 companies. Right, so she's a shareholder in 2 of these companies. She has 800,000 and intends to invest in new shares. All 3 companies have decided to issue additional shares on the 1st of March at the existing market price on the 28th of February. Right, now, they were first one. They want you to calculate Sandy's percentage shareholding in Green Limited and comment on your findings. Now, so we said it's a shareholder in 2 of these companies. She has 800,000 and intends to invest in new shares. Now, let's look at information B. Shares and shareholding of Sandy Charlie, that is in Green Limited. We are looking at Green Limited first. The number of shares in issue is 1.7 million, 1,700,000 shares. Sandy is owning 900,000. Straight away, you can see 900 out of 1.7 is more than 50%. She is holding more than 50% of the shares in Green Limited. If I have to work that out, you end up with 52.9%. So Sandy has 52.9% shares in Green Limited. Now, the first question for 4 marks, calculate Sandy's shareholding in Green Limited and comment on your finding. So you calculated it, you got 52.9%, very good to those that worked it out. Yes, and your comment is Sandy owns more than 50%. She has controlling interest. She is a major shareholder. In other words, she's got controlling interest. She has majority shares in this company. Yes, she is a majority shareholder. So that's your comment. 2 marks for the calculation, 2 marks for the comment. You got your 4 marks. Then they said calculate the minimum number of shares you should buy in Green Limited to retain majority shareholding status and the amount you would have to spend to retain major shareholding. Now, when you work this out, now listen to me very carefully what I'm saying over here. See, if you want to be majority shareholder in any company, okay, I'll show you the calculations. What you need to understand firstly, you don't need 51%. You don't need 51%. You simply need 50% plus 1 extra share. If you got 1 more than 50%, 1 share, you will become majority shareholder because nobody can match your number of shares. That's the first thing. The second thing, shares normally are sold in batches of 100. So if you say 50% plus 1 share, or if you say 50% plus 100 shares, you are perfectly correct, you spot on, and you'll get your mark. If you say 51%, I can tell you something, that the examiner, he may accept your answer, he may not accept your answer. So you be careful with your answers. So you're going to say, firstly, she's already owning 900,000 shares. Now, Green Limited, Green Limited wants to issue a further 250,000 shares. Now, I want to ask you a simple calculation. You can do it so easy. It is so easy. She's already owning 900,000 shares. She's already owning 900,000 shares. So the company already have issued 1.7 million shares. Work it out like this, it's quite easy. So they have issued 1,700,000 shares. Now they want to sell another 250,000. They want to issue another 250,000 shares. That, if I add it up, they will have in issue 1,950,000 shares. Now, that's how many shares that will be in issue. Now, if you want to be majority shareholder, you must have more than 50% of that. So if I divide that figure by 2, if I take 1,950,000 and divide it by 2, that will give me a figure of 975,000 shares. 975,000 shares. So, if you own 975,000 shares, you will have 50% of the company. You will be owning 50%. Now, our friend already owns, she's already owning 900,000 shares. Sandy already has 900. So she now needs to buy, if she buys 75,000, then she'll have 50%, but then that won't make a majority shareholder. So she already owns 900,000. So if she is owning 900, she needs to get another 75,000 to give her 50%. But I told you, you need one more, or you can buy shares in batches of 100. Let's say she buys another extra 100. So she needs to go and purchase, she needs to buy 75,100 shares. So they will accept in the examination, this question too is another popular one. They will accept in the exam 75,100 shares is what she must go and buy, or she can buy 75,001. She could buy that, or she can buy 75,001. So you can give any one of these answers, 75,100 or 75,001. If she buys those shares, she will be the majority shareholder. Nobody can have more shares than her, and she will be controlling in this company. So that would take care of that part. But then they ask you, and how much money she needs to spend in order to buy. So if we're working on 75,100 shares, now what was the price of the share? I need to see the price of the share. The price of the share in the company was market price on the stock exchange, 520 cents. So if I said 75,100 shares, that would be times 520. Then she needs to spend an amount of 390,520. That's how much money she must spend to become majority shareholder. She must go and buy 75,100 times 520 to give you 390,520. Or if she buys only 75,001, then she needs to spend that 75,001 times 520 will equal to 390,000. 390,000. This will be 390,005 rands and 20 cents. That's how much? 100 zeros supposed to be out. It's yeah, take that. 390. She needs to spend 390,005 rand and 20. That's how much she'd have to spend if she buys 75,001. That's your answer for the 4 marks for that question. Please, you must practice these things. This will come out in the exam. You must know what to do. You must prepare accordingly. And this is not difficult. It's common sense. They will accept both. 300, there's the 2 answers. I've got 390,520. That's correct. Or if you worked according to 75,100 shares. Or if you used 75,001 share, then you'll use the second answer. It's up to you. It's up to you which one you use. 75,100 or 75,001. Both will be correct. It's up to you what you choose. Okay, that takes care of the, that was the calculation. Now, what advice would you offer Sandy regarding her regarding intention to purchase shares in Plaza Limited. Provide 2 points, quote figures. Now, what advice would you give her? Now, if you look at Plaza Limited, what you need to look at is what is the market price of the share on the JSE? 5 rands 32. The price is 5 rand 32 cents. What is the net asset value, NAV? That's another ratio that's extremely important that you must look at, NAV. Now, the net asset value is 5 rand 66. Net asset value tells you what one share is worth in the business. What one share is worth in the business. One share in the business in Plaza Limited is worth 5 rand 66. But it's trading on the JSE at 5 rand 32. This means that the share is undervalued. It is undervalued. There's very little demand for the share. That means because people are not prepared to pay what it is worth. Okay, so your advice to her, that means there's a lower market price. That means there's a drop in the demand for the share. You're going to talk about, although the dividends may be high, because they gave us a payout rate of 103%. They gave us 103%. But this, they paid out by using the profits of the previous financial years. So what advice you're going to give her? You're going to quote these figures. You're going to tell her about the net asset value. You're going to tell her about the payout rate. Okay? Then we're going to talk also about this business in terms of the debt equity ratio. Yes, they are depending a little more on the borrowed monies because they were 0.7:1. Now, it is approaching, the danger zone as such. Because once you come to 0.9 and 1:1, then you are in trouble. You are depending too much on borrowed money. So basically, you're going to tell her, you can look at the ratios, you're going to talk about the net asset value, very little demand, that means demand is dropping for the shares, and then you're going to talk about the dependent on borrowed funds. But they ask you what advice you would give her, you're going to tell her that maybe it's not a good idea to buy those shares. It may not be a very good idea for her to spend her money on those shares. Okay, now listen, this takes care of paper one. Paper one, you've got your income statement, that's your statement of comprehensive income, you've got your balance sheet, that's your statement of financial position, you've got your ratio analysis, you've got the cash flow. I've done a general paper with you. If you work out a few papers, I am telling you, you'll be smiling all the way to the bank in the examination because you're going to be scoring such good marks if you only think about the sections are all there. It's broken up. You've got the state. Now, what you mustn't do is don't for 1 minute think, oh, will an income statement come out or will a balance sheet come out? Will an income statement, balance sheet? You go and practice everything. There are so many papers on the net. There's so many papers that your teachers have given you on in school. There are also that just in time, that document that was sent by the department. The department sent you those books. Those books are very handy. Work out those papers in those booklets, and I'm telling you, you will be smiling all the way. Once your results come, you'll be thrilled. Or when you write the paper, you'll find it is so easy that, hey, you know what? Accounting is not difficult at all. I can score such good marks. And yes, I am positive that many of you will do exceptionally well this year, provided you do the necessary examples. You cannot go into the exam room thinking that, you know, it will just happen. Accounting is a subject that is practical. You need to do the examples. With examples, you'll be able to do the work. If you don't do the examples, then obviously you're going to be puzzling in the exam. It is sad when we mark and then when we see that learners, you'll find that learners, if I give an example like a balance sheet, statement of financial position, under current assets, you've got inventory, trade and other receivables, and cash equivalent. Now, it is sad when you see learners putting land and buildings, equipment. That means they never ever did a single example. You'll need to practice. You must practice. You must sit down, spend half an hour a day. You can study for your other subject, but study at least half an hour a day with accounting. Set aside some time, sit down. You've got those books. Do an example, just do it, and through repetition, it becomes second nature. I'm telling you, you'll be fine with it. Let's look at this paper now. This paper, second paper. Now, you know, I hear from so many learners, I see so many people around, and there's lots of them message me and so on. I'm sure your educator, I'll try and see what we can send all those links, those that are asking for the link. Yes, we're going to be doing this paper now. This paper was sent to you. Okay, now listen. The question that learners are asking, bank reconciliation statement. Your educators, the teachers will have told you that for this year, just for this year, bank reconciliation statement will not be tested. Don't waste your time looking at bank recon questions. It's not coming out. They're still trying to sort out what to do about the EFTs and so on. So because of that, you will not be tested on the bank recon. So it makes your life so much easier. Now think, if no bank recon, guaranteed debtors recon, debtors and creditors recon are the two that are left. It's going to be in the paper. It must be in the paper. You're writing a 2-hour paper, 150 marks. They'll definitely test you on debtors. They'll test you on creditors. You'll be a fool to go in the exam room and you left out something. But let's look at the very first question over here in this paper. And what I've done, I put up the memo also, so I will show you the answers because there's so much of theory. There's so much of theory in paper 2. So I said, let me put the memo so you can see the answers and you can make notes so that you don't mess up. Right, now let's look at the first question. The very first question says, indicate that reconciliation and age analysis. Age analysis is how old an account is. We're dealing with debtors. Now let's look at the very first question, 1.1. Indicate whether the following statements are true and false. They want us to say whether they're true and false. Let's see. The first one. An internal auditor will want to inspect the bank reconciliation statement at the end of each month. That is absolutely true. An internal auditor will look at the bank statement and he will do the necessary. So basically, the first one is absolutely. We'll open the answer book as well. Okay, so you're going to find the first one is true. A debit balance on the bank statement reflects. Now remember, there's no bank recon, but that doesn't mean they can't ask you about a bank statement. A bank statement, all businesses have bank accounts. So you must know that. A debit balance on the bank statement reflects an unfavorable balance. It means that you owe the bank money, and that is absolutely true as well. If you have a debit balance on your bank statement, It means it is unfavorable. You owe money to the bank. That is true that the bank overdraft. Third one, service fees and interest on overdraft will be recorded as bank charges in the cash payments journal. That's false. You know the GAP principle of matching, you must keep them separately. It is materiality. This is materiality. Interest must be shown separately. Interest must be shown separately from bank charges. Your credit card levy, service fee, cash deposit fee are bank charges. Okay, the fourth one, I'm going to leave that because it's dealing with a post-dated check which you will not be tested on. So I'm not going to do the fourth one. I don't want to confuse anybody. Right? Don't worry about number 4. Right? Brand traders sell goods for cash and on credit. They want you to calculate the correct balance of the debtors control account on the 31st of August, and then they want you to show all changes to the balance of 200,000. So basically, in my writing paper, they gave you the closing balance of the debtors control account. Now you must remember totals of the CRJ, that is debtors control in the CRJ, total in the CPJ, total in the debtors journal, total in the debtors allowances journal. Totals get posted to the control account. Individual entries get posted to the individual debtors accounts. So you must be able to identify whether it affects the control account or whether it's going to have an effect on the individual debtors account. Now, if a transaction is left out altogether, if a transaction is left out altogether and was not recorded, then it will have an effect on the debtors account as well as it will have an effect on the control account. Now you need to read carefully and you now need to think logically. Now let's read and let's see. So they gave us the balance in the debtors control was 200,000, and then they gave us a debtors list with the Elisma and Beauty and Titus and Carla, and they gave us how much each one owes us. Now we need to work out where the errors are, rectified, but at the end, the two balances must be equal. If they're not equal, you got a problem. Let's start. So the first one, you've got over there errors and omissions noted. These must still be taken into account. The total from the debtors journal was posted as 66,800 instead of 64,200. Now you posted the total of the debtors journal. If you posted the total of the debtors journal, it went to the debtors control account. So you posted incorrectly to debtors control. You posted 66,800 instead of 64,200. You posted too much. You added too much to the debtors control account. So how much extra we added? We added 2,600. So what I need to do is I need to decrease my debtors control. Yeah, I'd like to. So, okay, if you open the menu, but then it will show the whole thing. Okay, let me write here. So what I'm saying is that we added 2,600 600 and extra to debtors control. So when I go to debtors control, I'm going to say minus 2,600. It will be minus 2,600. So there's minus 2,600 over there by debtors control because you added too much. Okay, so that takes care of the first one. The second one, a credit sales invoice issued to Titus for 1/8 was not recorded in the books of Cabby traders. So you never entered it at all. You left it out. I sold goods to Titus for 1,800. Let's go to Titus's account and I'm going to put there plus 1,800. Plus 1,800. I'm adding to Titus and I never entered it in my books at all. So I'm going to put it in my debtors control also plus 1,800. Plus 1,800. And that takes care of the second one. And you know something, the debtors control, that is the debtors recon and creditors, should take most of you 6 or 7 minutes, 10 minutes max. Even if they give you 20 minutes, you should be able to do it. The third one, stock sold on credit to Carla, you sold goods on account to Carla, was incorrectly entered to the account of Beauty. You sold to Carla, but you're adding it to Beauty, 8,300. Mistake is you went and made Beauty's account go up by 8,300. So go to Beauty and you're going to put minus 8,300. Take it out from Beauty. It's not supposed to be there. And then go to Carla, and Carla was supposed to pay us. So make her account go up plus 8,300. It's a plus 83 over there. Then the next one, a credit sales invoice, you sold goods on account issued to Carla for 6,000. Be careful with this one, was treated as a return when posting to his account in the debtor's ledger. So you sold goods to Carla for 6,000. Carla's account supposed to go up by 6,000. But instead of increasing Carla's account, we made a mistake and we treated that as a return, as though Carla returned goods, and we made her account or his account go down by an amount of 6,000. Now to rectify it, if I add 6,000 to Carla, I'll only cancel the mistake. So what I now need to do is I must add the 6,000 and then I must put through the correct entry. So what I will do is I will double the figure. So remember as a rule, if you make an entry in the correct account, like in this case, we've made an entry in the correct account. We made an entry in Carla's account, but we put it on the wrong side. So as a rule, if you make an entry in the correct account, but put it on the incorrect side, you must double the figure. So go to Carla's account, you sold goods to her, so you're going to say plus 12,000. You're going to double the figure. You would say plus 12. You are cancelling the first 6 and then you're putting through the correct entry. That takes care of the fourth one. The fifth one, I'm just going to substitute. Instead of check, I'm going to say an EFT, electronic funds transfer. An electronic funds transfer of 13,500 received from Beauty in settlement of account of 15 was not processed by the bank. We're going to say it never go through. For whatever reason, the electronic funds transfer did not get sorted out. Now, she paid you 13,500 but was owing 15. So obviously I had granted a discount of 1,500. I'm going to cancel everything because it was not sorted out. So let's go to the account of Beauty. So Beauty, we had decreased the account by 13,500 and a further 1,500. I had decreased Beauty's account by 15,000 rands. I must now go and increase Beauty's account by 15,000. So I'm going to say plus 15. So you're going to say Beauty plus 15,000. And if this was not processed correctly, it's also going to have an effect on the debtors control account. In Beauty's account as well as debtors control. I need to sort that out. So go to control plus 15,000. That's 15,000. So you're going to say plus 15,000. That was the fifth one over there. Now let's go to the next one. Goods sold on credit to Titus for 5,800 were correctly recorded in the journal. So you sold goods on credit to Titus for 5,800. You entered it correctly, but it was incorrectly posted as 85 to his account in the debtor's ledger. So when it came to the posting, you posted the incorrect amount to Titus's account. You sold goods to him for 5,800. You're supposed to increase his account by 5,800, but you went and recorded 8,500. You overstated the amount that is in Titus' account. You charged him 2,700 Rand extra. You charged Titus 2,700 extra. So you need to go to Titus's account and decrease it minus 2,700. You're going to decrease that account. The mistake was only in Titus's account, not in the control account. Not in the control account. And then let's look at the last one. A cash sale. It means I sold goods for cash. 3,000 was recorded in the CRJ. That is absolutely correct. You record it in the CRJ and post it as 3,900 to the credit side of Elisma's account. You shouldn't have brought Elisma into the picture here at all, because she came, she bought for cash, paid, took the goods and went. That was a normal cash sale, but the bookkeeper made a mistake and went to Elisma's account and decreased it. When you credit a debtor, you are decreasing the account. So they decreased Elisma's account by an amount of 3,900. So what you must do, go to Elisma and you're going to say plus 3,900. So you're going to increase her account by 3,900. Nowhere else. Don't go debtors control and so on. Okay, right now what you'll need to do is extend the figures and put it in the money column and give me the totals. If I do the calculation for the debtors control, I got 200,000 minus 26. I've got 200,000 minus 2,600 plus 1,800 plus 15,000. You should have an answer of 214,200. Now, when you extend the figures in each one's account, you should get here 64,000. 64,500. The second one, you've got 47,900. Then you've got 47,100 for Titus. And for Carla, you've got 54,700. And the total, if you add up, you end up with 214,200. That's the same answer like what you've got there. 214,200, 214,200. You should be able to score your marks quite easily with the debtors record. If something like this comes out where they're asking you to work out the correct balances, read carefully, interpret it, and record it. Okay, let's move on to the next bit. This debtors age analysis. You need to make sure you understand debtors age analysis quite in detail, because it's something that will come out. It's something that is important. They said, firstly, calculate the percentage of debtors accounts that do not comply with the 30 days credit terms. If you look at the debtors age analysis, the information they gave us, the amount owing by the debtors is 70,000. For the current month, 12,600, no problem with that. They came this month and they bought for 12,600. There's no issue. 30 days, that is according to our terms, credit terms and information B. Debtors allowed 30 days to settle their account. 21,000, no problem with that. But now the problem comes up with the 28,000 that they said for 60 days, and more than 60 days was 8,400. Now the question, what percentage of debtors that are not complying with the 30 days credit limit? So the 28,000 is not complying, the 8,400. 28 plus 8 is 36,400. So to do your calculation, 36,400 do not comply. How I got 36,400 is the 28,000 plus the 8,400. Take that and put it over how much was our total amount owing by debtors? 70,000. So 70,000 times 100 over 1. Because the question is saying what? Percentage. So I need to work out the percentage. And when I work that out, 36,400 over 70,000 times 100 over 1, I end up with an answer of 52%. 52%. So 52% of debtors are not complying with the credit terms of our company. That's a very poor reflection. It means that there's poor control over the debtors. If they ask you about debtors and about whether you have good control, etc., it's poor control. That means we need to investigate and see why we are selling goods on account to customers that are not paying their accounts on time. You normally would check your debtors, look at the debtors list, and see who is exceeding the credit terms, who is not paying within the prescribed period, and then you'll say probably that you will not sell goods to them until they settle their accounts, etc. Okay, the last question there. List 3 internal control measures that J&T traders can use to ensure that only reliable clients are granted credit. Reliable clients are granted credit. Now, what internal control measures you would implement? What you need to do is you need to think logically. see, you will firstly do proper detailed credit checks, where you probably you can go check with credit bureau and check with other businesses that they are buying from, whether they're settling their account on time. So you do credit checks, a detailed credit check. That's one of the things that you would possibly do. Second thing, they said you want control measures that you can use to ensure that only reliable clients are granted credit. That means you want to grant credit. Now, who are you going to grant credit to? You can't just grant credit to anybody and everybody. Is the person working? Does he earn a salary? You're going to look to see whether they have a salary advice. You can check with the employer where they're working and see whether they employed on a full-time basis, and how long they're working. Not somebody that just started work, not somebody that just started working in a company. So you're going to see the salary advice. Third point that you could possibly say, that before you grant any credit, you could say, okay, everybody these days, if you check with your parents and all, when you go anywhere, they want proof of residence. Proof of residence. They want a light account, they want a telephone account, they want some account on your name. So you're going to ensure that you have the correct addresses of the individual. You have correct addresses. So let's look at the memo over here. So there's it all written out nicely, neatly, and you can see they can perform credit checks, check employment history and salary advice, contact details, residential, postal, and contact numbers. So those are some of the details that you will look for when you want to grant credit. You need to read the question carefully. You must get to the point and see what they're asking of you. And if you can do that, I can assure you that you will score full marks. Nobody is prepared to take any marks away from you when they're marking. So you will score very well if you can only write to the point. Okay, that takes care of the first question. Let's look at question 2. Let's move to question. Now, I didn't discuss with you creditors reconciliation, but it's along the same line. Creditors recon is where we are buying from our suppliers. You must look at examples where we are buying from our suppliers and we owe money to them. They are our creditors. Same story. You must look at between the statement that they send you and the account that you have in your ledger. The two must correspond. Basically. That's what we are saying. Creditor sends you a statement at the end of the month telling you how much you owe him, and you have a record on your side. Compare the two, and you'll be able to then say whether the figures that what he's asking you and what you've got, whether they match or not. You all must look at creditors' reconciliation statement. You must look at it. Don't take a chance. Don't go into the exam room. You don't know about creditors. We've covered the debtors over here. Think logically. That's all. I'm telling you, you think logically, write clear sentences. You shouldn't have any problem. And please use a dark pencil. You do know you're allowed to use a pencil in the exam, but you must use a dark pencil. Anyway, okay, let's look at the second section. Inventory valuation, stock valuation. Now, under stock valuation, there are three methods. Let's just recap quickly. You've got the first in, first out, 3, 4, or 5, 4 method. What stock comes first, I sell that first. 2, weighted average. I can work out the average price of my stock, that is of one item, and multiply it by the number of units you got, will give you the value of your closing stock. using the weighted average. Thirdly, specific identification method. Specific identification method. What does that mean? You identify specifically what is left and you work out the value of those items. Specific identification method is for expensive items, expensive commodity, the expensive lounge suite, or you've got jewelry, motor vehicles, you are dealing in those products. You will use specific identification method. However, if you are using work at the value of closing stock using cheap items, weighted average. Cheaper product, weighted average. And then if there's others that are slightly more expensive, then you will use first in, first out. Okay, let's look at this question. It says here, the shop is owned by Mark Fish and sells soccer balls, amongst other sporting goods. The periodic inventory system and the weighted average method are used to value the stock of soccer balls. The financial year ends on the 31st of July. Now, they mentioned periodic inventory. The first question that they're asking you, the two methods, you got the periodic inventory system, and the second one is the perpetual or continuous inventory system. You've got the perpetual or continuous inventory system. Now, they want you to give one difference between perpetual and the periodic inventory system. You must remember, in the perpetual inventory system, it's all the new businesses that use computers. Okay, they use computers, they've got scanners at the till point. The moment you get to the till point, they just simply scan your product and the amount appears on the till, and you can see how much you have to pay and you can walk away after paying. But the periodic inventory system, there's no computers. The owner is there himself, maybe he's got a manager, and they will just record whatever you are buying. But in the perpetual inventory system, the one main difference that you can talk about is your cost of sales is calculated at the till point, that is after every sales transaction. The moment you sell the product, the cost, and it is scanned, the cost of sales is calculated. In the periodic inventory system, you don't know your cost of sales until you do a physical stock count. You got to go and count all the stock in your shop, count everything in your shop, and then you will be able to work out your cost of sales. So in the perpetual inventory system, the cost of sales is calculated after every sales transaction. You will know your cost of sales at any time. The owner can go onto the system and he can determine or check the cost of sales. But in the periodic, after 1 week, 1 month, 2 months, he doesn't know what the cost of sales is. The owner doesn't know. If he wants to work it out, he must go count everything in his shop, count all his stock, and then only he'll be able to determine the cost of sales. Another difference between the perpetual and the periodic, in the perpetual inventory system, you use a trading stock account. You record that as an asset, trading stock. We have a trading stock account in the perpetual inventory system. In the periodic inventory system, we use the purchases account. We use the purchases account. Purchases is regarded as an expense. It's an expense account. Okay? So you've got in the perpetual inventory system your trading stock account. In the periodic, you use purchases, it's an expense. Then you could even say another difference, If you want to know how much of stock you have on hand, how much stock you got in the perpetual inventory system, you can calculate it or you can determine it quite easily. If you go to Spa and if you ask the floor manager, how many 2-liter bottles of Coke do you have in the warehouse in the back over there or on the shelf? How many do you have? He can go on the system and he'll tell you exactly how many 2-liter Coke is on the shelf and in the store. Because every time they sell, it will minus and it updates the stock figures. So in the perpetual inventory system, your stock can be, your stock is known at any point in time. You will know what stock you're supposed to have. You can also determine if anything is missing quite easily, stolen. But in the periodic inventory system, you will not know the stock on hand until you do a physical stock count. Okay, I've given you 3 differences over there. They just asked for 1, but think about it. It's a common question. Right? The second question, calculate the value of stock on hand according to the weighted average method at the year end on 31st of July. Now they want you to work out the value of your closing stock using the weighted average method. In order to do the weighted average method, you've got to take the number of units that you have at the beginning, plus how many more units you bought, minus any returns, and you know exactly how many units you had available for sale. And then you look at what was the total cost. Now to work out the average price, take the total cost, and divide it by the number of units, and it will give you the average price of 1. Then see how many units you had left over at the end. So we work at the value of the closing stock of the soccer balls. Now I had 1,000 soccer balls left over at the end. They want you to work out the value of the closing stock. Then what I will do is I'm just going to show it to you instead of writing it all out. Let's just discuss it. So if you look at calculate the value of stock on hand using the weighted average, what was your opening stock figure? If you look at the first figure that they got there on the memo, it is 346,800. 346,800 opening stock plus your purchases. Your purchases was 3,686,400. And I returned 150 from the January purchase. The January purchase was 1,200 rand each. I returned 150. Take 150 times 1,200 and you end up with 180,000 rands. So the figures on the top, it's 346,800 is the opening stock plus my purchases of 3,686,400 minus the return of 180,000. How I got 180,000? I had returned 150 soccer balls and the cost price was 1,200 because they told you you returned from the January purchase. In January, I bought 1,320 and I paid 1,200 rand each. So 150, that's what I returned, times 1,200, and you ended up with a figure of 180,000. That's what you put at the top. Divided by how many units did you have left that you had purchased? Okay, I started with 300. Opening stock was 300. I purchased 3,230. That would give me 3,530. But I returned 150 minus 150. So I end up with 3,380 at the bottom. So take 3,853,200 divided by 3,380, and that will give you the average price of one soccer ball of 1,140. That's the price of one. 1,140. Then you take that and multiply it by 1,000, because I told you your closing stock was 1,000 soccer balls. So multiply it by 1,000 and you ended up with an answer of 1,140,000. That's the value of my closing stock using the weighted average method. 1,140 rands. Okay. The next one for 5 marks, you know what? They're donating 5 marks your way. You can't afford to throw the 5 marks. They said, Mark suspects theft. Do a calculation to confirm his suspicion. If you think about it, tell me, how many soccer balls did you have to sell? You had 300, which was opening, plus 3,230. That was 300 plus 3,230. 3,230. That's how many you had purchase plus what you started with. And then you returned 150 minus what you returned to your supplier, 150. You minus 150. Now, that's what you had to sell. Then how many did you sell? You sold 2,345. So minus 2,345. That's how many you sold. That was gone. Customers took it away. 2,345. Now, if you think about it, if you do that calculation, according to that, you're supposed to have an answer of 1,035. 1035. This should equal to 1035. But you only got 1,000 left. So 35 soccer balls disappeared, stolen. So 35 is your answer. There's the workings I've shown you. They've got it there on the memo as well. You can see it. 35 units were missing. Right, the last question. Now here you must think logically. Calculate the stock holding period. Calculate the stock holding period in days using the final stock figure. Now, you know what? You all know the formula. The formula, you all know it to be average stock over cost of sales times 365, and you'll get your answer in days. Average stock over cost of sales times 365 gives you your answer. But this question told you quite clearly, calculate the stock holding period in days using the final stock figure. Now, don't be foolish and use average stock when they're telling you to use final stock. They want to know you got 1,000 soccer balls left over. How long will it take to sell them before you are sold out? That's what they want to know. How long will it take? Now, if you look at the memo, it might be confusing to some of you, but listen to what I'm saying. I'm going to explain it to you. I'm going to explain some things to you over here. Now, I need to work this out. I need the value of my closing stock. We did work out the value of the closing stock, which we worked out for the 1,000. Calculate the value of the stock according to the weighted average, and the 2.1.2, we worked it out to be 1,140,000. That is the value of the closing stock. 1,140,000. So I need my 1,140,000 divided by cost of sales. But I'm faced with the problem. I don't have my cost of sales. I don't see it there. Now, in the periodic inventory system, how do you work out the cost of sales? It's a set pattern. It's opening stock plus purchases plus carried on purchases. And if you have custom duty plus custom duty minus my closing stock will give me cost of sales. Will give you cost of sales. So, my opening stock plus my purchases, there was no carriage, there was no custom duty. So I'm just simply going to take, basically what I'm asking you to do is to take your opening stock, which was 346,800, plus my purchases of 3,686,400, but don't forget minus the returns, my return of 180,000. So minus 180,000 will give you the stock that you had available, then minus the closing stock of minus, that is 1,140,000, will give you the cost of sales of 2,713,200. So what did I say? Take the opening stock figure of 346,800 plus my purchases of 3,686,400 minus my return, which was 180,000, minus 180,000, and then minus your closing stock of my 1,140,000 will give you your cost of sales figure of 2,713,200. That's your cost of sales figure. Now, what was your formula? Take the closing stock, because they said use final stock. My final stock figure was 1,140,000. 1,140,000 divided by, that was 1,140,000 divided by your cost of sales, which was 2,730,000, 2,730,200 times, they want the answer in days, times 365 over 1. Work that out and you're going to get your answer in days. 1,140,000 divided by 2,713,200 times 365, and you're going to get an answer of 153.4 days. 153.4 days. Now you mustn't round up, you must leave it like that. You must say 153.4 days. Don't say you can't have 0.4 per day and so on. That's how you leave your answer, and make sure you put the word days next to it. 153.4 days. Now, there was another way of doing it. There was another way of doing it. I'm going to talk you through it. Just listen to what I say. I got 1,000 soccer balls left over, which I never saw. I got 1,000. I want to know how long they will take to get sold. So what I can do is I can say, okay, how many did I sell? How many soccer balls did you sell? I sold, they told us my sales now they're telling me that my sales, I sold 2,300 2,345. I sold 2,345 soccer balls. If you look at the question paper, they gave you the sales. They told you how many you sold. You sold 2, 3, 4, 5. That's how many soccer balls you sold. Now, if I want to know, on average, how many soccer balls am I selling per month? Take 2,345, take 2,345 and divide it by 12, because 12 months in the year. So I want to know in 1 month, how many soccer balls am I selling? I'm selling 195.42 soccer balls. This equals to 195.42 soccer balls is how many I'm selling per month. So in 1 month, I'm selling 195.42 soccer balls. Now I got 1,000 soccer balls left. I got 1,000 soccer balls left. So how long will it take me to sell all those soccer balls? I will take 195.42 is what I'm selling each month. So I'm going to take 1,000. Firstly, I got 1,000. So I'm going to take 1,000 and I will divide it by 195.42, because in 1 month I sell 195.42. I have 1,000 soccer balls, and each month I sell 195.42. So it will take me, it equals to 5.1 month, 5.1 month. Or months. It would take us 5.1 months to sell those soccer balls, 1,000 soccer balls. Now the question, the answer they wanted was in days. So you must give it to them in days. Now you must use averages. 1 month is 30 days. Don't worry about 31 days. Don't worry about 28 days, 29. 5 months times 30 days, 5 times 30 is 150. 5 times 30 is 150. 0.1 of a month, 0.1 of a month will be 3 days. 0.1, because if you take a month, is 30 days. Half a month, 0.5 is 15 days. 0.1, what is 0.1 of 30 will give you 3 days. So basically, if you put an answer down, that means it's 5 times 30 is 150 plus the 0.1, which is 3. It means 153 days. So you could have worked it out using this method, or you could have done it according to this method here. 153.4 or 153, if you did it like that, there's no issue. The examiner will give you full marks for your answer. You'll get full marks for your answer. And you can see exactly how you worked it out. So you should be able to work out the stock holding period. Normally the formula is average stock over cost of sales times 365. But if the question tells you use final stock, please don't mess it up. You know what to do. Don't lose the marks unnecessarily. Okay, so I've done that part. Now, so we worked out, that was question 2.1.4. That was a stock holding period. Now they said, give mark advice based on your calculation above, provide 2 points. They want you to give him some advice. Now, in order to give him advice, now you think logically. Okay, so if you're going to give him advice, the soccer balls are going to last 153 days. It's too long. You're holding too much of stock. So you're going to tell him that, you know what? Firstly, you should rather buy stock in smaller quantities. Buy stock or purchase stock in smaller quantities. Buy more often. Why buy so many and keep it in the warehouse and the possibility of it getting stolen? If a fire takes place, the stock will get burned. Then I need warehousing. I must have a warehouse manager. All these costs will come in. So you need to basically, the advice you're going to tell him about the stock that you found, that he's got too much of stock, he's holding too much, he needs to reduce his stock, he needs to purchase more frequently in smaller quantities. Then, okay, the answers they put up there, okay, these soccer balls are quite expensive. You're going to advise him. You must try and find a cheaper supplier. But the most important part here is when you find a cheaper supplier, it must be with the same quality or better. It mustn't be something that is inferior quality, not inferior quality, same quality. Then they said, okay, maybe you should buy more soccer balls during the soccer season. When there's a soccer season, then you buy the extra soccer ball. Otherwise, during off season, don't buy so much. Then they've got points that only order when reaching the minimum stock level. So maybe you'll say, okay, see, we got already 1,000. That's too many. What you need to do, maybe when you come down to 50 soccer balls, then place an order for more soccer balls. Now they gave you 4 marks. They just wanted you to give 2 points. There's so many points that you can think about. You could put these things down as your possible answer. Also, you must remember when you have too much of stock, you're holding too much stock, you know what you're doing? You're tying up your cash. You're going to experience a cash flow problem. You got so much stock lying there, you don't have the cash. The money is all tied up in the stock that you're holding. So that is why you need to reduce your stock. You must keep stock that is moving all the time. You know what can happen also? If there's some new tournament or something comes up, and you come up with a soccer ball for that occasion, your soccer ball, nobody wants to buy it because it's out of fashion or it's not the one that they are using in that tournament, like the World Cup or Champions League or something, and you got a special soccer ball for that, then you know the one that you got, the kids don't want it. So don't hold too much of stock. The last question there, provide 3 points for good internal control of stock. You must always remember, that's a famous question, internal control, whether it's over your assets or whether it is over your stock. You must remember that stock can disappear so easily. So therefore, you need to have good internal control over your stock. 1, you must count your stock regularly because you want to know that there's nothing missing. You mustn't come to know at the end when suddenly a whole lot are missing. So count stock regularly. Then they also suggest randomly and check against your stock record. You know the accountant is keeping a record. Check whether your stock figures match what you got in the warehouse as compared to what you're supposed to have. So check your stock regularly. Okay? Then under this, they also talk about division of duties. Obviously, you can't have a half a dozen people, 5, 6 different people handling the stock. If you got it in the warehouse, you should have division of duty where one person has the key, one person is in charge, he's keeping the record, and he is answerable. Then we already spoke about good control over stock, order in smaller quantities. Always remember, It doesn't make sense. Don't say buy in bulk, you get a discount and so on, because over here, we're taking so long to sell it. Improve physical security. You got to ensure that, like, for example, at the exit in your shop, in your business, you got a security guard at the exit. They ask for a till slip as the customers leave. So somebody can't just walk out with a whole lot of soccer balls, etc. Okay, so that was the 2.1.5. Okay, now let's look at the problem-solving question over here. Now, under problem-solving, you will get this. You know what? They're trying to give you questions that you can write and you can score marks. You can pick up the marks quite easily. Read the questions, and I'm telling you, you'll be able to score all the marks quite easily. Right? Under problem-solving, you got Marco Traders has 3 different branches. So Marco Traders has 3 different branches. The owner, Marco Ivers, is concerned that the branches are not running effectively and provides you with the following figures for May. Okay. Now, firstly, you got Senegal, you got Welcome, and you got Perez. You got 3 branches. Now, always you must look at each one, and then you must try and look for things that seem out of the ordinary. So the question is, identify one problem in each branch, quote figures to support your answer in each case, and then advise Marco on how to solve the problem. So they want you to identify the problem and give a solution. Right? So you're going to identify and then solution. Let's look at Senegal. Let's look at Senegal and tell me what you see. Let's check over there quickly. And when I look at Senegal, my sales are 405,000. I got 20,250 returned. My advertising is 25,000. I have 8 sales assistants, 8 hours a day. The stock will last 60 days. My rent is 38,000. Now look at Welcome and Perez. If I look at the rent, straight away my eye fell on the rent. I got 38,000 rand rental, but the other business, Welcome, is 19, which is half, 50% of Senegal's rent. And Perez is also 19,000. Let's look at the sales figure for Senegal is 405. The sales is 540. So you can't tell me now you've got bigger premises at Senegal and you're paying more rental. The problem straight away is the rental. My rent expense in Senegal is 50% more than the other 2 stores. So that's what you identified the problem. The rent is exceptionally high. Solution, find alternate premises in the area at a cheaper rental. Nothing difficult, doesn't take a rocket scientist to figure that out. So you can comment on the rent, 38,000 as compared to 19,000. So we need to find a cheaper rental. Okay, that's rent. Then the second issue I can come across, we've got 8 staff. We employ 8 staff, but Welcome got 6 and Perez only got 4. So we got basically too many sales assistants. You can do some calculations here too if you want to, right? So now basically we're selling for 405,000. You got 8 people. If you take 8 divided into 4 or 5, you're going to work out what is the average sales per staff member. And you can then compare it to what is in Welcome's average. Take 540 by 6, divided by 6, you're going to get a far higher average. So in other words, they have too many sales assistants, 8 compared to 6 and 4, and the average sales per assistant, how they got 50,625 is by simply taking 405,000 rands divided by 8. And if I divide it by 8, they get 50,625. That is the average per staff member. That's how much each one is selling. But if you work at the average for Welcome is far higher. Welcome is far. They didn't do that in the memo, but they put the one part. You could go and put the second part also. Divide 540 by 6. And it for 9 6s are 50 for 90,000. So in Welcome, one staff member sells for 90,000. But in Senegal, one staff member only sells for 50,625. So you can comment on those. So what you now need to do, what's the solution for that? Either you're going to tell them reduce the staff, or 2, the staff need to increase sales. They must increase sales to match the other average sales per assistant. Or like I said, reduce the staff. Like in Welcome, one staff member sells for 90,000. But over here, there's only 50,625. Okay, let's see the second problem now with regard to Welcome. What's the issue over there? In Welcome, they got 540,000 sales. Returns are 64,800. That's a hell of a lot of returns that we are experiencing. Customers are buying the stock, but the stock comes back, 64,800. So too high. Our returns are too high. Work out the percentage. Take 64,800 and divide it by 540,000 times 100 over 1, and you end up with an answer of 12%. So your returns are too high, 12%. Now, solution. Now, if we are delivering goods to customers, etc., we said, make sure, give the customers the right product, deliver the right goods so that invariably the returns will decrease. If you give the customer what they asked for, you deliver the right goods, they won't bring it back. Don't give them the wrong size, the wrong color, the wrong product. Deliver correct items to customers. That will automatically reduce your returns. Okay, second problem in Welcome, the stock on hand will last you 120 days. 120 days divided by 30, 4 months. 4 months, that's too long. Stockholding period is too long. You need to reduce your stock. Same solution what we gave on the other side, purchase in smaller quantities to avoid loss due to fire, theft, etc. So don't order so much of stock. Reduce the stock. Now let's look at Paris. Now in Paris, look at the sales. 405 for Senegal, 540 for Welcome. Paris sales are 260,000, way below the other two. But look at the advertising. You advertise for Senegal, you spend 25,000. Welcome 25. Here you spend half, 12,500. So you need to increase the advertising curve. You need to make sure you advertise for them as well. If you're not going to advertise, you're not going to do the sales. So advertising will be another issue with regard to Paris. Okay, so that's the one issue, and your solution is increase advertisements to increase sales. Now, the second point, Seneca got 8 workers. Welcome got 6. And here you only gave them 4 staff members compared to the others. So maybe you need to increase your sales assistant, but if you increase the advertising, automatically sales will go up. You need more staff, and obviously you want to make sure that if you employ more staff, then sales must automatically also increase. Sales must also automatically increase. Okay, so those are the type of questions, and I'm telling you that all of you should understand one plain simple rule. I'm telling you that, listen, if you write good English, you take the information from, you must look at the question, look at it in detail, and I'm telling you, you should have no problems with that. Okay, so I've looked at debtors recon, we've looked at stock valuation over here. The 2 sections that we didn't cover, which is budgets and manufacturing. What you all need to do, is you'll have this paper, you'll need to work it out, look at the section on budgets, look at the section on manufacturing, and you know there is no spotting in accounting. Everything is tested. If I just, okay, that takes care of the stock valuation, and I told you on the stock valuation, your FIFO or FIFO, weighted average specific identification method, you need to look at it nicely, properly work those examples out. Okay, you've got periodic inventory, you've got perpetual inventory system. Now, very quickly, in the section on manufacturing, you should just make sure that you do know your production cost statement. You can't be taking a chance on the production cost statement where you don't know the format. I'm just going to go randomly through that. We just have a few minutes before the lesson ends. So I just want to quickly just mention that production cost statement. You've got your direct material plus your direct labor, which gives you prime cost, also known as direct cost. Direct material plus direct labor. Both those, that is direct material and direct labor, are variable costs. They vary with production. Then you have factory overhead, and factory overhead is a fixed cost. Then prime cost, that your direct material plus direct labor plus factory overhead, will give you total manufacturing cost. You must know your production cost statement. If you know it, you're already confident when you go into the exam room. Then you will say work in process beginning of the year minus the work in process at the end will give you the cost of production. Now I want to give you one tip over here. Now, they sometimes in the production cost statement, I'm talking about manufacturing, the production cost statement, they sometimes leave out the work in process at the end of the year. They will leave out the work in process end of the year, and then you can't get your cost of production at the end of the year. Now, the lifesaver that will rescue you in the exam, I am telling you, remember what I'm telling you, the lifesaver, it will rescue you in the exam. In order to do the production cost statement, now you don't have the figures. What you need to understand is go and do the finished goods note. They won't ask for the finished goods note. You go and do the finished goods note in rough. That is your balance at the beginning and cost of production, but you don't have the figure. Write it, but no figure. Then that will give you the goods that you have available for sale. Less minus your closing stock of finished goods. Less the closing stock of finished goods will give you cost of sales. That is your opening stock of finished goods plus the cost of production, which you don't have, Write the details, leave it blank. We'll give you all the goods that you have available for sale, minus the closing stock of finished goods. We'll give you cost of sales. Now, you don't have the cost of sale because you don't have the figure at the top. But they will tell you the sales figure. They give you sales, they give you markup. Calculate the cost of sales. Take the sales figure times 100 over 100 plus the markup. You got your cost of sales. Once you got the cost of sales, take the figure, slot it in at the bottom in the finished goods note, work backwards in reverse. Whenever you work in reverse, you change the sign and carry on. And you will get the cost of production. Once you got the cost of production, take the figure and transfer it to the production cost statement right at the bottom and work backwards, and you get whichever figure you're looking for. So I'm warning you, I'm telling you, make sure that if figures are missing, they left it out, you must have some method of arriving at the answer. You will use the finished goods note. It will rescue you in the exam. You don't have to waste time. You just simply look at the finished goods note, go draw it up quickly, and you'll get the missing figure. So that's one thing that you need to understand. Okay, the second thing that I want to tell you is they will always ask you about break even. Break even. Now, they must ask you break even. What is break even? The point at which you need to make a profit, no loss. That means the number of units that you must manufacture and sell. You must manufacture and sell, and the profit from those will cover all your expenses, your fixed costs, fixed expenses. So the formula, total fixed costs, which is made up of factory overhead plus admin. Total fixed cost is your factory overhead plus administration cost divided by selling price per unit minus variable cost per unit. What is variable cost per unit? It is your direct material cost per unit plus direct labor cost per unit plus selling and distribution. Those three make up variable cost. Direct material plus direct labor plus selling and distribution. If you add those three, it will give you your variable cost per unit. And then you simply do your calculation and you get break even. But wait a minute. What if the question says the owner doesn't want to know break even? What he wants to know is how many units must he manufacture and sell if he wants to take his family on an overseas trip, and he wants you to tell him how many units he must manufacture and sell so that he gets 250,000 in his hand profit so that he can go on the overseas trip. Simple. Take the same formula to work out break even. It is total fixed cost at the top, and just put the profit at the top, how much he wants to make. You want to make 250,000, total fixed cost plus 250,000 divided by selling price per unit minus variable cost per unit. And you will get the number of units you must manufacture and sell so that you will end up with a profit of 250,000 rands. So what you need to know is read the questions carefully. Read carefully and you should be able to work it out. They love to ask. That's a new question that they've been asking once or twice. It could possibly come out this year. We're not spotting, but we are saying be prepared. Be prepared for anything and everything. So if they tell you how many extra units you must manufacture, you must read the wording. Then you must just take the 250,000 and divide by. Now, what is selling price per unit minus variable cost per unit? You call that contribution. You call it contribution. To take the profit and divide by, and it'll tell you how many extra units you need to make. Anyway, look, all the best for your exams. I have given you all my number. Quite a number of learners messaged me with questions, queries. I've responded. And if any of you have any issues when you're working some things out, you're not sure of something, you can message me and I will respond, if not immediately, but later in the evening, etc., when I'm free, I will respond to your question and query, and hopefully all of you will do exceptionally well in the exams. I wish you well, and you all have come on. You are working, and as long as you work the examples out, as long as you work out the examples, I am telling you, you should have no problems. Anyway, okay, you can enjoy the rest of the day. We will chat again whenever I hear from you. All the best, and thank you so much.